Hello and welcome to the Learn to Trade with Black Bull Markets podcast. Today we are joined by Eric Walkington, a Senior Account Manager at Black Bull Markets, who will be sharing with us the key data reports that traders need to watch when trading gold. Welcome, Eric.
Thank you for having me, Mark.
So before we sat down, I asked you to provide me with a list of 3 key data reports that gold traders should keep an eye on. And the first on the list is the US Federal Reserve's statement on monetary policy. Now, did you put this one first because it's the most important?
Yeah, I listed these reports with what I consider to be the most important first, second, and third, based on my experience in the gold markets.
Okay, great. So can you give our listeners a rundown of what the US Federal Reserve statement on monetary policy is and why it's so important for gold traders to pay attention to it?
Of course. So essentially, the US Reserve statement on monetary policy is released after the Federal Reserve makes an interest rate decision. Now, it provides insight into the current economic outlook of the Fed, including its views on the future interest rate hikes, inflation, and economic growth, and other factors.
Sure.
I think this report's super important because what happens is any changes in the Fed's plans to make monetary policy decisions can be basically interpreted from the statement. Now, these changes can have significant impact on the price of gold. For example, if the Fed signals a pace of interest rates to be adjusted, for example, from a high pace to a low pace, then you're going to have a change in gold that indicates accordingly.
Right, and I find it interesting that you place the monetary policy report at number 1 on the list instead of the actual interest rate decision. So why is that?
Well, look, so I understand that might seem backwards to people. The reason I choose this is because interest rates are very deliberate, they're very predictable, and you're not going to get too many kind of unexpected interest rate moves from the Fed, because the last thing they want to do is kind of cause a shock in the market. And so what happens is that they will place interest rates on a guidance instead of making it really ambiguous for the markets to decide on. So don't get me wrong, interest rates are still very important, and obviously they dictate a lot of monetary policy as well, but they don't necessarily cause massive movements in gold compared to the monetary reports.
I see, that makes total sense. And when you're talking about the interest rate decisions, are you only talking about those from the Fed, or should gold traders be watching these decisions from other central banks?
Look, for me personally, interest rates from the Fed are more important than most other countries, but you do raise a good point. Other economies like the Bank of England, Bank of Japan, European Central Bank also indicate where major markets are moving overall. And essentially, because the US Federal Reserve is the denomination for most major assets, such as gold, oil, and other different key important factors in manufacturing and everyday life, it is the most common one to watch.
So for the third report on your list, you have CPI. Can I presume you're talking about the US Consumer Price Index for this final report?
Yes, the Consumer Price Index report for the US is my third report.
Great. So can you tell us a little bit about this report and why it's important for gold traders?
Yeah, of course. So essentially, the CPI report is released by the US Bureau of Labor Statistics every month. It measures the changes in price over a basket of consumer goods and services that is set by the Bureau of Statistics themselves. And obviously, that's a very important part at the moment because we are seeing high inflation. So the relationship between gold and inflation is generally viewed as high inflation leading to an increase in demand for gold. This is because investors look to protect their cash from erosive effects of inflation and increasing prices of everyday living.
And I've heard talk that the CPI report is not as important as it used to be for gold traders, since gold didn't advance in price over the past few years during this recent period of high inflation.
Yeah, look, that's a very good argument, and it might be true. There are factors that most retail traders won't have insight to, which can cause kind of prices to move without these standard fundamentals causing it to change. So, I mean, I've also heard that the argument that the US dollar being in such strength over this time has suppressed the price of gold. So I still think this report is important for gold traders to watch. And I mean, this line of conversation is a great way to highlight that you can't only rely on one single data point, and it's very important to look at macroeconomic changes throughout multiple different countries and economies for gold especially. But in terms of that, you need to make sure that you do have a key set of reports, and these three are mine for basic fundamentals.
That's a great way to finish. Thanks for joining us today, Eric.
Thank you, Mark.
Thank you for listening to the Learn to Trade with Blackbull Markets podcast. We'll be back next week with a new trading topic, so be sure to subscribe in your favorite podcast player.